Welcome back to my channel, guys. It's your boy Marcelino. Today we will be looking at market structure, the whole beginner's course, everything. If you are a beginner, you will know everything that you need to know before you need to head on to the advanced course on market structure. Okay, I do want to ask you guys, comment down below, is there anything else that you want or that you think before you going into this video you need to know? Okay, whether it be support and resistance, key levels, whatever it is, comment down below, hit the pause button, comment down below, and then go in. Let's move on to the video. Thanks, guys.
So guys, we're looking at market structure. My first question about market structure would be, what is the importance of market structure? To me, how I would like to define market structure and its importance is, it's the basis of the market. Okay, it's the foundation of the market. It's, if you want to give a small analogy, you know, when you build a house, you have to lay a foundation first before you actually build a house. So the market structure is the foundation of most strategies. I would say 95% of strategies that are out there is based on market structure, guys. So in many people's words and my words too, market structure is king. Okay, guys, market structure is king. And it, as a beginning just starting in forex, it's very important that you understand exactly what is going on with market structure, guys. It's so important that you grasp this concept, because market structure forms patterns, market structure forms a trend, market structure uh decides and shows you where price is going to go. Okay, so without further ado, let me actually get into what exactly I want to teach you guys. Okay, so what is market structure? As you can see here, market structure is a series of highs and lows in the market. Okay, these highs and lows are defined as higher highs and higher lows in an uptrend, and lower lows and lower highs in a downtrend. Okay, so I do want to mention that, as you guys can see, there is another note on the screen that says there are three types of structures in the market. So by now you probably know these. They are the uptrend, the downtrend, and a consolidation. If you don't know what they are, I will explain it to you, and how market structure actually makes the uptrend and the downtrend, and how you can determine when you are in a consolidation using market structure, guys. So let me explain exactly how market structure is formed. So looking to the left hand side of the screen, we're looking at the uptrend. So what you can see, market structure is formed when a high is formed. We then have a bit of a pullback to form a higher low. What this higher low is, why is it called a higher low? This is called a higher low because it is a low that is higher than the previous low right here. Okay, what we then do now is we form what we call a higher high. This is called a higher high because it is higher than the previous high right there. And thereafter, what we then form is a higher low. And this right here is called market structure, guys. We are, when you form this type of pattern in the market where price is starting to move and take out higher highs, forming new higher highs that is higher than the previous high, forming new higher lows that is higher than the previous low, this is what we call an uptrend, and structure is starting to form, bullish structure is starting to form. Okay, that is what we're looking at. Sorry, that is what we are looking at in terms of a trend forming now. So when does a actual uptrend start? A lot of people don't actually get this. When they first see this higher low start, what they then think, we are immediately into a trend. But guys, I do want you guys to know that a uptrend only starts and is only confirmed once this higher high is taken out and this higher high is confirmed. Okay, so once the first higher high is taken out and this higher high is confirmed, that is when a uptrend is formed and is starting to move. So that's when you can start to then begin to look for buys on higher low formations. Okay, so now we understand market structure in an uptrend. It's simply just higher lows and higher highs. Higher lows being a low that is simply just higher than the previous low. Okay, higher highs being a high that is simply just higher than the previous high. Let's move over to a downtrend. Okay, so now looking at the downtrend, a downtrend is simply just, as it mentioned here, lower lows and lower highs in a downtrending market. Okay, so you can see a low was formed, a lower high was then formed, and then thereafter a new lower low was formed that is lower than the previous low, and thereafter a new lower high was formed that is lower than the previous high. Guys, it's very important that these things occur, that the lower high is lower than the previous lower high. Okay, and then we just continue that, and as long as we are continuing making new lower lows and making new lower highs, we are in a downtrend and we are just looking for sells. Okay, similarly to the uptrend, guys, a downtrend is only confirmed once a lower low is actually taken out and a new lower low is formed, as you can see here. Okay, guys, now let's look at the third structure. The third structure is known as a consolidation, guys. You don't necessarily want to be trading within consolidations, as you don't know which way the market is actually going to be breaking out to. However, you can trade uh you can trade at the lows of a consolidation and at the highs of a consolidation. Now, what makes a consolidation? A consolidation is simply just an area in the market where price is not taking out any highs or any lows, significant highs or significant lows. So therefore, we are now moving in a range, or we are moving in a consolidated area. Okay, so as you can see here, as displayed on the chart, guys, we are just moving up and down, not necessarily taking out any highs or taking out any previous lows. And so what you do in this scenario is just wait for price to break out of this range and then see exactly which way it continues. Okay, so without further ado, let's actually go into a chart and identify each of these trends and each of these market structures, so that you guys can use this as an exercise to then get your eyes used to seeing higher highs and higher lows in an uptrend, seeing lower highs and lower lows in a downtrend, and identifying consolidations. Okay, so let's see if we can find possibly an, okay, looking at this pair that we are on right now, this is Euro USD, and what you can see here is, let me use this tool. So you can see price has been pushing up. We formed a higher high that is higher than this previous high. Okay, we then form a higher low that is higher than the previous low, as you can see. Next up, we form a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and then a higher high. Okay, guys, so as you can see, as explained at the top, right, this higher low is higher than this higher low. Similarly, this higher high is higher than this higher high, and that's why it's called a higher high, and that's why we actually call this an uptrend. As long as higher highs are being taken out and new higher highs are being formed, you are in an uptrend and you are simply looking for buys. Okay, that should be Good, that should be good. Let's see if we can now find a pair in a downtrend. Let's check USD CAD. I know this has been downtrending for quite a while. So what you can see here is that we have been moving down. You can see we formed a low in the market, a lower high. We then took out that low and we continued down, indicating we are now in a downtrend, forming a new lower low that is higher than the previous low. Okay, so this new lower low that was formed is higher than the previous low. So this shows us now that price is trending downwards. So now we're anticipating a lower high to form, and once the lower high is formed, because we are in a downtrend, you are expecting price to now form a new lower low that is lower than this high, or lower than this low, sorry. A new lower high is formed and a new lower low is formed, and that's the basics of market structure, guys, in an uptrend and in a downtrend. Now let me show you how to identify a consolidation, guys. Let me show you how to identify a consolidation. So what you can see here on AUD USD is price has not been moving upwards, or price has not been moving downwards in any manner. So what you can see is that from this area, when price pushed up, we then pushed down. Okay, so we have this area in the market that is a high, and you have this area in the market that is now a higher low. Okay, so this is a higher low, that's a higher high. Okay, we pushed up, but we failed to break this high, so we still holding this. We then came back down, and what you can see is price is not taking out, as I explained at the start of the video, price is not taking out any highs or any lows in the market. Okay, until we did this right here. We took out a high, but then what did we do? We returned back into the range that was formed right here. So we returned back, and you then see that this is still holding right here, and we are still consolidating, guys. We are still consolidating. Okay, and that's the basics of a consolidation, guys. It's just when price does not take out any significant highs or any significant lows. Okay, so just a bit of a recap. Market structure is king, guys. It's the foundation of the market. You need to know and understand how market structure work and how market structure is formed in order to actually be in on the right side, because market structure actually forms the trend. Then you need to understand the higher lows and higher highs that form in an uptrend, the lower lows and lower highs that form in a downtrend, and then a consolidation. Just looking at this again, let me go up. You guys can just get a last look. If you want to, you can take some screenshots. Make some notes. This right here is the 3 types of markets or types of structures that you will be able to trade within the market. Okay, guys, I do want to say thank you so much for tuning into my channel. Do like, do subscribe, do comment down below if this video has actually helped you in any manner, and also comment if there is anything that you have learned, or if there is anything that you want me to add. I will be making an advanced section of market structure, which will contain the break of market structure, the complex pullbacks, and all of those types of things. Okay, thank you so much for tuning in. Peace out. Don't forget to like, don't forget to subscribe. Have a wonderful trading week, guys. Peace.